All right. I think we're live.
We are in person today in Canada, Calgary specifically. Welcome to Stock Talk episode 39. This is my first time in Canada. We're in the flesh. We could prove it. We're not AI. It's a real clap right there. I thought about giving you a hug, but then I was just like, might make it weird on stream. But thank you for having me in your house. It feels very interesting to have watched your YouTube videos for years and to be where the magic happens.
Where the magic happens. Let's go. Yeah, we're in person. So we have an interesting stream planned for today. We're basically just going to use the stock unlock screener and try and find interesting stocks and basically just run through a bunch of different stocks. So that's basically the plan, unless we get some suggestions in the chat that you want us to take a look at. Then we can take a look at some stocks.
Yeah, we'll be creating a watch list from this too. So for those who follow along, or if you're listening, we are creating a watch list that will have a public share link, which is great. So all the stocks that we look at, talk about, the ones that we like, we will put into the watch list. So everyone will have access to that after the stream, which is super fun.
The link is actually the top link in the description. It should be. So if you want to follow the watch list live, then you can also click on that link. And well, it's public, I think. Yes, it is. It is.
We'll find out. So
cool.
Hello, everyone in the chat. Yeah, I also have my laptop up here. I am obviously not in the stream, but we see all your comments. And I'm also going to be researching alongside Daniel. So it's going to be a very natural, just two stock nerds researching stocks live. So should we hit that screener?
Does Jake look a lot bigger sitting next to Daniel? So Jake is taller than I am. I'm actually quite short. Well, I don't want to say quite short because I think I'm actually average. I'm about 5'9". What are you, 6 feet?
You're above 5'9" above average. I'm just above 6 feet.
So yeah, Jake's quite a bit larger than I am. Maybe I should. There we go. This is good for my ego. All right.
And also, thank you, the Dividend Investor CPA. Remember seeing you in the past streams as well. Really appreciate you guys coming out to show support. This one was planned super last second, but yes, number 39. So we're making our way through.
Let's go.
I'm ready to get into the screener. So we're going to have to see what filters we want to add, the types of stocks we're looking for. I think that on this trip, you and I have been talking a lot about stocks in general, probably 50% of our conversation, but actually a lot about smaller cap companies and some of the opportunities there. One of the podcasts I listen to is the Billionaires podcast, which has a bad name, but lots of great investors there. And they brought on a micro cap person. And I just always get so captivated to hearing about the due diligence these people do, talking to management and the opportunities, as well as risks in smaller cap companies. So it could be fun to try to find some diamonds in the rough there.
Yeah. So Jake and I were kind of just hanging out last night. He landed in Calgary. And we were both saying, like, how awesome would it be to find, like, a Constellation Software when it IPOs and it's like a $100 million company, and then just ride it for, like, 30 years and just make, like, literally 100x. So, like, and it's not easy to do. Definitely not easy to do. But that's kind of the premise of how we came to this video idea. So we're just going to take a look at some small cap stocks on the screener. And with that being said, why don't we just jump right into it?
I'll reword that into dumb people speak. It is really awesome to buy low and sell high, but it's especially awesome when you buy 100x low and sell high. So,
or just hold it for forever. Why not? And then just leverage it. Just kidding. But.
Yeah. Well, I have my eyes on the chat. So I guess if we pop open the screener, we can see what filters we have. I think we'll definitely want to make sure some of those insight screeners are good. I think also narrowing down our markets as well as market cap could be a good start.
Yeah. Okay. So I have some screeners saved here. So if you don't know this, on Stock Unlock, you can, when you make your own screener, you can actually save all of the filters that you're using so that you can, refer back to them pretty quickly. So I actually already have a Canadian small caps screener, but I'm going to change this and we're going to start with the NASDAQ.
Yeah, and for those who are on audio only, what we're looking at right now is there's tons of filters you can add. Things as simple as what markets do I want to screen stocks for, and market cap, things that people know a lot about. The real power in this screener and why we built it and why we believe it brings a lot of unique value to investors is the Stock Unlock Insight Scores section that you see. So if you're not familiar, we have our own scoring system. We're very open with how it works. And you can get pretty fine-grained with the types of companies you want to look for. Do you care more about growth, profitability? Are dividends important to you? So that's something that's very unique about our screener that I like, just for people who have not used this yet or might be listening on audio on Spotify.
Yeah. So the first filters I'm putting on are NASDAQ and the New York Stock Exchange. Actually, you know what? I'm going to add OTC to this list because that's typically where some small caps trade, and I'm fine with that. So, and then we're also looking at market caps between 5 million and 100 million. So we're talking some pretty small companies right now.
5 million is...
It's fine.
That's low. All right.
Well, we got an hour to fill, man. We could take a look.
Fair
so
enough.
We're going to also look at the general score on stock unlock from 3.5 to 5. And I care about profitability. So I want the profitability between at least 3 and 5. Maybe we should put the financial health because I really care about that too. So let's put at least, let's put at least 3 to 5 in the financial health as well. Save these filters and let's see what we get.
Yeah. And we might not right now because it's too much, but another one I like is growth, just to like avoid stocks that are like not growing. But yeah, this is probably a good start. That's like one of the fun things with the screener to me. It's like there's so many things to do. I can just like sit there for hours and like try different configurations. But
yeah.
Anyway,
okay.
so you were just toggling the columns visible there. Cool.
Okay. So number 1 with a general score of 4.95 is WDLF. You know what? Why not? Let's take a look.
I'll pop it open on my computer too.
All right. So it's been around for a while. Looks like the stock has not done much. 9% free cash flow yield.
I'm already kind of scared by what I'm seeing.
So when I screen for stocks, by the way, I do like a very quick screen. So what I'm looking at right here is the financials on the general tab. And I can already see that the revenue and free cash flow is all over the place. I'm immediately not interested.
Yeah, I'm a hard pass on this one too.
All right, so then we got a media company, $70 million market
Oh, dude,
cap.
this is an artificial intelligence and blockchain powered social network. I've never heard. Sorry, not this one. The last stock. That all the red flag buzzwords to me were in that one.
This one, I don't know what happened to this one. It looks like it probably went private or something. So not interested in that one either. Yeah, I don't know what's going on there. Insignia, Blue Ridge Real Estate Co. Interesting. All right, small cap real estate stock. Let's take a look. This also looks like it maybe got bought out or something right here. It doesn't really look like it's traded since May. So whenever I see that, that's whatever. China Index Holdings, not really interested. United Maritime Corp. Marine, not really interested in that.
Why not the United Maritime Corp?
All right, fine.
It's in the marine industry. That's our favorite.
11% dividend yield, apparently.
Up. And it's still trading. One thing that I've heard from a lot of other investors too is like they'll get thousands of stocks together and they'll screen through them once, get rid of probably like 80% of them, then screen through it again. So what we're going through here is actually like pretty normal since there's so many stocks out there.
So yeah, they engages in the worldwide seaborne transportation of bulk commodities. The company is headquartered in Athena, Attiki. Yeah. Company's fleet consists of 4 tanker vessels and 1 dry bulk vessel. Okay, so yeah, they're just basically a shipping company, and it looks like, let's take a look at these financials here.
$4.80 earnings per share trailing 12 months, 34% free cash flow yield. So I want to see, like, is this business growing? Because just a light fundamental analysis, that has not been a red flag to me yet.
I mean, yeah, its operating cash flow in the most recent quarter was $6 million. Not bad.
I'm seeing debt. All right, $54 million in total cash. And their long-term debt is $35 million. It did peak at $76 million, which is actually a lot, but it does seem like they had paid down their debt. It's interesting.
$54 million cash.
Yeah, so they have more cash than their debt, which is nice. Positive tangible book value.
Yeah, they've been paying off their debt. The one thing this is why I immediately don't like shipping companies is because they tend to be very volatile. Like their earnings and free cash flow tend to be very volatile, and unpredictable. I mean, what was that one? ZIM. Everyone was asking about ZIM for a very long time. And it was because the company at one point, like the dividend yield right now is apparently 191%. But this stock has gone down massively. Free cash flow yield apparently is 261%.
Didn't they announce that they cut? I might be making it up. I thought that they announced that they were cutting their dividend potentially.
Yeah, but like this company was generating so much revenue and free cash flow and everything. So a lot of people were very interested in it. But I mean, shipping rates were insanely high during COVID. And then take a look at what has happened. So all of its free cash flow has just, it's gone. I mean, it's pretty much gone.
So, sorry, are you sharing your screen right now? Because I'm not seeing it on the YouTube.
That's very delayed.
Or this is very delayed. Oh,
yeah. So back to what I was saying, these shipping companies, that's why when I saw that it was a marine company, a shipping company, I was like, I'm not really interested personally, because shipping rates go all over the place and that can massively change the company's fundamentals.
Yeah. We have Grape Jelly coming in too, saying the dividend is 30% of the profit, like Calm. You might be in the Discord. Not ready to talk about Calm stock, but definitely might have that one ready for next week. I do have my eyes on the chat if anyone wants to chime in on some of these stocks that we're looking at. If you're just joining, what we are doing here is using the stock unlock screener and hunting for fun, smaller cap companies. We're creating a watch list that has a link in the description, so we're going to share it with everyone at the end.
Okay, we found a small cap bank right here. Jake's favorite. Looks like it's doubled since 2020-ish. 1% dividend yield, 8 price to earnings ratio, 11 earnings yield. Okay. No cash flow data though. Interesting.
Also, the last market hours quote is from 7-9, which is interesting. So that's like also a little bit lagged.
Weird. No, that's fine. Okay. Financials, revenue, and the trailing 12 months looks like it is continuing to grow. Let's see if it's had any problems. There's no balance sheet data. Weird.
Oh, actually, sorry. Can you go back to balance sheet? We might have to. Is there a yearly available?
Yearly is available. Cool. Okay. Deposits are apparently growing too. That's good to see.
That's from 2010.
Yeah, not a lot of insider stuff going on here.
Is this one of the OTC stocks, or is this on?
I'm not sure.
On the major exchanges, because it's showing us data as if it's like an OTC.
It's on the OTC.
Yeah, that's probably why a lot of the data is not as regimented as stocks on like New York Stock Exchange.
I mean, it looks like an okay bank just based on its quick financials and everything, but I'm not loving its price for how small it is and everything. And I don't think that its growth has been incredible, so I'm just going to pass on that one too. What do we got next? Revive Pro Care, consumer products. Looks like that's growing quick. Sure.
We're getting a lot of casual hellos in the chat. Thank you, everyone, for being so friendly. Hi from Ireland. What's going on, Charles? Sell by the bell. Hello. Great to see you. Rajesh, great to see you guys together. Yeah, no, I feel super, super great. I keep on getting like this weird notion to be like, I'm with Daniel, and then like touching his arm. But yeah, thank you, everyone. I see a lot of suggestions to look at stocks as well. We do normally do that on the stream. This one, we're probably going to keep it to the screener, but if we have time at the end, we'll definitely do our best to get to those.
So this company looks like it's actually been doing quite well. It was worth 11 cents in May of last year. It's up 490% since then. Let's take a look at its financials here. Let's go to our quarterly view.
Oh, wow. They've had a big revenue spike recently, but it might be coming back down.
Yeah. It's their cash flow. So they recently had some big operating cash flow increase. This could have been due to a sale of an asset or something. I think that their cash flow is probably artificially high right now from some sort of one-time event that took place.
Did you already go through what this company does? Because I missed that part.
They sell hair and skin products.
And they employ 8 full-time people. One thing that's a little question marky to me about this business is it looks like it might have been a good value at 11 cents, but today I see the market cap is 66 million already. And when you start to compare that to the financials it's producing and that it's actually fallen back the last quarter, it feels to me like this one doesn't really have too much wiggle room in terms of margin of safety, if at all, if we're just doing a pure fundamental analysis.
Yeah, there's a lot of banks on this list.
Did we just move past RVIV?
Yeah, I'm over it.
Yeah. That's like my thing with banks, not to like always argue about banks. I'm just like, what is their moat? Like, what makes one bank better than another bank?
716 looks like it's growing. Headquartered in Ottawa, really? Interesting. What do we have here?
What's that? Ottawa, Illinois.
Oh, sorry. Some spike in revenue. Cool.
Is that from like the interest rate rise for all these banks?
I have no idea. Maybe. Deposits are still growing. Nice to see. Okay. Cool. Looks like it recently initiated a dividend. What about insiders? No insider transactions going on. 7 PE though. I'm not seeing like anything outstanding with this bank though. Like it's just kind of meh. So next, let's go.
I wonder if we should refine the screener a little bit.
I have one here apparently already added to a watch list.
Do you know what it is?
I have no idea.
You added it to a watch list though.
I know, but I use stock unlock a lot. So
fair enough.
I probably found this stock at some point.
The symbol is TAIT.
It's in my plain research watch list. So there's that.
Sounds like fun.
Okay, it pays a 5% dividend, 24 million market cap, 14% free cash flow yield. Looks like revenue is kind of down this year. What does it do though? Engages in the manufacture and distribution of original designed and manufactured products and electrical components. 15 employees.
Dude, these are some small companies. Like that other one we looked at was like 8. And like that's like we're not too far away from that stock unlock.
So its revenue actually hasn't really done anything for like a decade. Its cash flow looks like it's at an all-time high currently. What are they doing with the cash flow? Basically paying a dividend. Probably improving the balance sheet. Yeah, they have like no liabilities, like none. So
dude, this company IPO'd in 1995.
Yeah, they have $8 million of cash. That looks like it's growing organically. Their debt has gone down. Their total liabilities are $1 million. So $8 million in cash, $1 million in total liabilities. So they're like cash rich.
Dude, I have not found a red flag with this business yet. Other than like it's like I'm not sure if I love the industry.
The only red flag for me really here is like its revenue just has done nothing for like literally decades.
Oh, God damn it. It's actually lower than it was in 2003.
Yeah. So, I mean, I don't know.
Say so. We want to add a stock to the watch list.
I'm sorry, I'm picky. I'm going to remove this one from my plan.
You're removing it from your watch list. Okay, the one thing that this company did start doing, as you pointed out, was like they just started paying a dividend. So I think like that's the thing that changed. If they're able to stay stagnant and like want to give back money to shareholders, like all right, but it just doesn't feel that good if they're not growing because like there's probably better options out there. All right, new stock, MUEL. Trying to think about the people on audio here. Highly recommend, even if you're on Spotify, we are posting the video now. Shout out to our friend and fan, Ali, who volunteers to put those Spotify videos out. So thank you for that.
This company's segments include dairy farm equipment, industrial equipment, field fabrication, and transportation. 50% free cash flow yield.
Whoa.
Let's take a look.
Whoa.
What has their revenue been doing over time? So their revenue hasn't really been growing since like 2012. So a decade of basically no revenue growth. What is their balance sheet though? 36 million in cash. Quite a bit in debt actually. I don't really love that. And it looks like they had a really good quarter, but I don't know if that's going to remain.
We are getting some requests on the filters for the screener. I'm not sure
All right, yeah, we
Our feeling
can.
about that.
Yeah, we can change up some filters. What's up?
Let's see what we got here. I think we got to add the growth score because what we're seeing a lot of
Okay.
are those companies weren't growing a lot. I think so. We have one crest here from Grape Jelly, up to screener to 280 mil cap, no financial bank sector, please. So that's one request. Let's see if I can find any more in here.
Let's go up to 500 mil. Why not? And let's get rid of banking and financials. Let's do that.
All right. If anyone else has requests, we're going to be checking periodically, so let us know in the chat. And if you're just joining, we are finding stocks and making a watch list that we're sharing. So
I'm going to
come and do investing research with us.
Okay, there we go. Let's take a look at these. We got another real estate stock right here. I'm down. Okay. This one's done very well since COVID. 300% since COVID.
Wow.
13% FFO yield, does not pay a dividend. Looks like it's been growing its revenues.
What the heck happened there on the quarterly view?
I'm not sure. Land development and home building. Okay.
22 full-time employees. That's like 4 million of market cap per employee.
So look at this revenue. What happened here? So its revenue was super high, and then it declined for a decade, and now it's back up to 62 million. Operating cash flow is also not the best. I'm sorry, we're really not finding any like slam dunks here.
What's up with some of the top ones? Have you already looked at those? The MGOM?
Sure. This one looks like it was taken private.
Want one.
I thought that this would be more exciting.
I mean, I might be of the counter opinion here. I almost love finding stocks to say no to more than stocks to say yes to. And it really should actually be that way, like 95+% of the time.
Since 2020, this one is up 1,000%. Okay. 15% free cash flow yield. Okay.
All right. Might have found something cool. HDSN
operates as a refrigerant services company, which provides solutions to recurring problems within the refrigeration industry.
Sounds nice.
Okay. Interesting.
It's got a perfect 5 growth score.
Dude, look at that.
Perfect 5 management score. Whoa.
Look at that revenue.
Holy crap. We found a company that like actually has not been stagnant for the past decade or like losing.
That's actually been like.
Can you do quarterly?
Pretty consistent growth.
It looks like a little bit cyclical. Like you can see the spikes pretty.
Well, in winter, they don't have a lot of business. They're a refrigeration company. So it makes sense that the fourth quarter is not going to be strong.
So true.
Overall, though, like it's actually over time, it's been growing not that bad. Okay. What's the balance sheet like?
How much debt?
12 million of cash. They do have some debt.
How much?
100 million in liabilities.
Okay. Well, the thing about their debt is they've actually been paying it off aggressively. It looks like they're taking out debt a couple times and then have paid it back. So their debt actually, a relative peak, hit 91 million in debt for the 2022 first quarter report. Yeah, but now it's down to 35 million or 36 million if you round up.
Check this out. Okay. Their operating cash flow is at an all-time high of 68 million. And then their stock-based compensation is low. $4 million of CapEx. And then they've been paying off debt with all of their cash flow.
Yeah. Huh.
So that's where cash flow is going, is towards debt to try and clean up the balance sheet. Okay. What are insiders doing? Couple sells here, grants, sells. Okay. Do insiders own a lot though? This person owns quite a bit.
You can do that check mark to show only. Yeah. CEO owns 1%.
You know what? We're going to add it to the watch list.
Yeah, this is like one of those things where I would look into this more.
I would look into it more.
It's just, so these industries are a little bit hard to understand, right? Like what other companies are in the refrigeration space, but yeah, we got our eyes on the chat. What do you guys think about that one? All right. Well, I feel good. We're on a roll now. We're on a roll.
Yeah. Okay, we're going to take a look at SIBE. This is a semiconductor stock.
Whoa.
Oh, it looks...
Why is it trading so tight up there? Or it looks like it. We don't have the last month of data, so it might have been taken.
It might have been acquired. Yeah, this looks like it was probably acquired or taken private.
I like the NVEC. Semiconductors.
This one?
Number 10, yeah. Navec.
Sure, why not?
452 million market cap, 4% free cash flow yield, 4% dividend, has a high payout ratio. Don't like to see that.
Okay.
Did that just show that they only made 12 million in revenue in a quarter? But they're 400 something market cap?
Yep.
Aye.
Okay. So revenue in the trailing 12 months is at an all-time high, at least. Record quarter recently.
This company IPO'd in 1983.
They have very little liabilities. 17 million of cash. Only 2 million of total liabilities. So a very strong balance sheet. What about their cash flow? On a trailing 12 months basis, they have done $19 million in operating cash flow, low capex, and they've paid out all their cash flow as a dividend. So that's where all of the cash goes.
This is one of those Peter Lynch businesses where he would just get at you for not understanding what they do. I'm pulling this sentence directly from the About section. The firm manufactures spintronic products, including sensors and couplers that are used to acquire data. They use magnetoresistive random access memory technology, which is abbreviated as MRAM. Maybe there's some smarties here that go on the hardware side of computing to kind of understand where this company fits in. But I do not know anything about that industry.
Let's take a look at IMMR, 14% free cash flow yield.
So it was a no. It was a no from us on the NVEC.
Yeah, you got to be picky.
I can't even follow you, bro. You're fast. IMMR.
14% free cash flow yield. Revenue looks like it's okay. Let's take a look.
Like they were diluting a lot of stock there.
What happened?
I love how like the revenue and the costs just like literally mirror each other around like 2018. It actually is like hard to do that. What a swing. Yeah, no. It's a no.
That's a no for me.
All right, I'm following you on this one. What is professional services as an industry?
I'm not sure.
It sounds like very abstract. IBEX. And if you're just joining, we are looking for stocks, making a watch list, and we got a link in the description. So
12% free cash flow yield.
Yeah.
Looks like it's been public since 2020. Okay. So far, no major red flags.
They have 29,000 full-time employees.
Revenue's been growing. Okay. Balance sheet. 43 million in cash. They do have some debt. Okay. Cash flow in the trailing 12 months. Cash flows at a record high of 62 mil. They pay back debt with it.
Yeah, I'm reading through the description of this business. So this is a B2B company that sells services to other businesses. Was this one of the professional services ones that we clicked? Yeah. So one thing that we probably won't have time to find out on the stream, but it might be a watch list contender for more research. Not sure how you feel, is who are their customers? You want to see, like, do they have very high customer concentration? You want to avoid businesses where one of their customers taking up 50% of their revenue. How many customers do they have? Do they stay with them? And are there any competitors here? But yeah, this one's definitely interesting. I love the cash flow yield on it. What do you think, Daniel? Oh, you've moved on.
I moved on.
You added it to the watch list, though?
Yep.
All right. IBEX number 2 in the watch list. Moved on to Surge, SURG.
It's apparently a telecommunications company. That's up 227% since 2021. 8% free cash flow yield. Revenue is apparently spiking.
It seems like what has happened to the stock in the past? Like when you look at the max view, the stock has peaked at like really high, like 60 something bucks. Just like drops right back down.
Yeah, and look at that revenue growth. Like what happened here? Like its revenue just started exploding in like 2019.
With the costs, yeah, it actually looks its most recent quarter, they just became profitable. That's kind of cool.
Yeah, their operating cash flow just became profitable recently.
So I'm seeing that they issued a lot of stock in the last 5 years. So I am wondering if like shareholders are getting diluted a lot.
Yeah. The CEO owns 36% of the company. So some pretty big insider ownership, and they're buying, and they continue to buy.
I want to look at the per share metrics of this business because it looks like they're doing interesting things with their share count.
Yeah, it's a weird stock chart, though. I mean, it's coming back, though.
So strange.
It's coming back, though. You know what? It's interesting enough.
Stock number 3 in this watch list.
We need like an air horn.
Yeah. Hi, Tuna. Also, I'm getting to pet Tuna in real life, and it's way better than I even thought it would be, honestly. Tuna is an amazing cat. Oh, do you know I'm talking about you right now? Are you crawling into my lap?
It might be.
Come here.
Okay.
Oh, God. Cat invasion. I'm allergic to cats, by the way, so this is great.
That's great.
Tuna, your tail is almost in my mouth while I'm trying to look at stocks.
Mastercraft boat, hey?
Also, thank you, Chen, for that comment.
Which was what?
Jake looks pretty jacked in Canada. Daniel and I hit the gym before this meeting. So
yeah, we had a bro date.
What's up, David? Good to see you guys. Really appreciate all the hellos in the chat today. Really feeling the love. Thank you to the 73 people tuning in.
Okay, so this one has a 23% free cash flow yield. It looks like it got demolished by COVID, but then is up 450% from the lows there. Actually trading near all-time highs. This is Mastercraft boat.
Excuse you.
Thank you.
Mastercraft boat.
The revenue's been overall trending up for quite some time.
Your cat, Tuna, keeps like pushing on my arm while I'm trying to use the keyboard to pet him. Is this what happens to you?
Yeah.
Love it.
Their tangible book value has been, look at that. Wow. It went from negative 117 million to positive 112.
Good job, management.
Very consistent growth, which probably is being fueled by profits then, I would imagine. So let's take a look at what they're doing with cash flow. So yeah, cash flow is definitely at a record high right now, 143 million in the past year.
Their free cash flow yield is nuts. I'm trying to bring up in the freeform tool right now their price to free cash flow and operating historically.
So they pay off debt and they buy back shares with their cash flow. And then yeah, that looks like it's basically what they do.
This might be worth bringing up. So this is their price to free cash flow. Oh, actually, sorry, that was price to free cash flow and cost. Whoops.
You know what? This one is interesting.
I like
enough.
this. Yeah.
Yeah, this one's actually like quite interesting.
What do you think about me sharing my screen super quick to show this view, or should we just move on? Because
Sure,
their price to free cash flow and stuff is at a low. Okay. Hopefully this works. I'm going to add my computer to the stream and present.
What's up?
Okay, Tuna just left my lap. That started getting stressful. I wasn't able to use my laptop without Tuna like taking his head and pushing it very forcefully into me. Okay, so an extension of looking at MCFT. Amazing name for a company, by the way. Love it. So this boat company or whatever, if you look at their price to free cash flow and price to operating cash flow, it does look like it's trading near all-time lows. So either investors are missing something and this is a low price business, or there's something that people would uncover through more research. Again, we are not doing enough research to buy or sell the stock. This is just finding research contenders, but this is a really nice thing to see, especially for a value investor. Let's see, their latest is 4.1. Their lowest 3.9 for price to free cash flow. Very similar relative numbers for operating cash flow. Really love that.
It actually does look interesting, and I actually know someone with a Mastercraft boat. My only thing would be, is if we do enter a deep recession, would people still be willing to spend that much money on boats?
It depends how big the rich and poor gap is. If the recession only happens to middle and lower class.
Mark says they make really nice recreational ski waterboard boats. I see them all over the lakes in BC. I agree. My friend who owns a Mastercraft boat is out in Sicamous, and I've been on it, and it is a fantastic boat. Very nice, but also very expensive. So yeah, we'll add that one to the Watcheroni list.
we should totally call the watch list Watcheroni.
The Watcheroni.
Watcheroni stock talk number 39. Also, let us know if you guys like this. This is actually the first time on our stream in 39 that we are just going through the screener and finding stock. So we always love your honest feedback. Are you having fun? Are you not having fun? Let us know.
All right, GCT. Let's take a look.
Oh, can you share your screen again?
I am not sharing my screen.
Ah, got you, dude. Someone said one water marine is a much better stock. So yeah, this is what I always bring up too with the boat companies. Like before you ever pick one, like at least make sure you're looking at all of them and comparing all their numbers.
Yeah, okay. So we got some pretty wild price action here. Looks like it IPO'd in 2022. Since then, the stock has come down massively, but it's been coming back all right, you know.
This looks like the company I worked for before I left to leave Stock and Lock, the stock, which I can talk about now because I'm out of the withholding period. Oscar Health. I worked there, saw it through the IPO, and it's a very sad stock chart. And yes, I'm holding on to a lot of my options.
So we got a 29% free cash flow yield. Revenue's been growing, looks like pretty consistently, actually. So what do? Specializes in end-to-end business-to-business electronic commerce, e-commerce, for large parcel merchandise. 764 full-time employees. Okay.
All right.
Let's take a look at that.
These free cash flow yields are they're high.
I don't know what's going on there. Total cash 162 mil. Current liabilities 112. The long-term debt's been going down. Shareholder equity's been going up. So I wonder if that's organically with cash flow. Let's take a look. Cash flow in the trailing 12 months, 84.5 mil. Stock-based compensation is not too high. CapEx is low. They've been paying back debt. They did issue some shares recently, though.
What do you think about their revenue being at an all-time low in their reporting?
Yeah, I don't know what's happening there because take a look at this. Look at the quarterly view. They just had like this massive quarter here.
Okay, that's fair.
The revenue is not really growing, though. So I mean, you got a really high free cash flow yield there of 29%, though.
It's a no for me, Doug. I want to see a little more growth.
Okay. Global small cap self-storage REIT, let's go. These have been performing decently well.
Just so people know, I have talked about and own the ticker NSA, which is a public storage REIT.
All right. So
I am very enticed by this. I actually have not heard of this one. I feel like I should have.
So this one's been around for a long time. Ticker symbol is SELF. Looks like the stock is currently in a correction.
Sorry, I take it back. I did look at this one.
Stock is trading for about 5 now. 6% dividend yield, 8% FFO yield. Revenue looks like it is growing, but not super dramatically. Looks like it's kind of been topping out. Financials, income statement. So yeah, revenue's kind of been actually going down the past couple quarters, but in the trailing 12 months, it's up.
Yeah, and their dividend per share was 0.6 cents from 2016 all the way until 2022. So that's about 8 years of no dividend growth. And they just bumped it up by 3 cents, and it's also been stagnant. So typically when you look into REITs like this, you want to see the dividend growing year over year, or like to be getting share appreciation. And it is coming back to me now that that's one of the things I wasn't crazy about when I was looking at self PSA, NSA. Like there's a handful of self-storage, public storage REITs out there.
Yeah, I mean, the operating cash flow is also starting to come down. Let me just keep looking here for a second. There's not a lot of high insider ownership. Are insiders buying? Insiders are buying more shares, though.
That's an interesting one. I would just want to see them grow a little bit more. My thing is like there's other companies in the space, like the one I'm invested in, NSA, and I did a lot of research on their board and who's running it and stuff. So these people working here definitely have their work cut out for them. I think there's room for multiple of these companies, but I would definitely compare the bunch for those who are looking at this and like want to take a deeper dive on REIT self-storage.
Yeah. I'm going to add it to the watch list because I think it's kind of interesting. The thing that's selling me is insiders are buying quite a bit. So like they seem bullish. So I would take a little bit of a deeper look there. All right, let's move on.
I like that. I think we got like four in there now, right?
Yeah. We have another one right underneath it, Pine. That's a real estate company.
I feel like we've looked at Pine.
We have looked at Pine before, though. Global Water Resources is on one of my watch lists. Let's take a look. What was I seeing here?
Which watch list is it on if we click the star?
Plain Research.
Nice.
So for those of you who don't know, when I went to Asia, I made Plain Research as a watch list for like stocks I should research on the planes because I was taking them all the time. So this one is a utility. I imagine it's a water utility with a name like Global Water Resources.
Fair enough.
It's looks like it IPO'd in 2016. It's up 100% since then, 2% dividend. Revenue looks like it's growing okay. All right. Engages in the operation and management of water, wastewater, recycled water. So yes, a water utility company. Let's take a look at some financials now.
Yeah, interesting. It looks like it has like a handful of subsidiaries that it owns, which is also kind of interesting. So this seems like an umbrella corp for like a few different water treatment.
I'm really interested in the cash flow. Let's just take a look at the cash flow.
The one thing I don't like the payout ratios are high for their dividend.
24 million cash flow. So they actually have negative free cash flow. And they are diluting. Yeah.
42% EBITDA margin from our REIT insight scores. It's like nice. This is kind of like a mixed bag for me.
It's kind of a mixed bag for me.
Low cash, only. Oh wow, their total cash position is low. I'm looking. It seems like for a lot of the 2020 period, it was actually up above 12 million. It has since kind of like bopped around, and the last reported number is 1.19 million in cash, which
you know what
does not seem like a lot.
1 second, we gotta take a look here. What's going on?
They got 100. Ooh, dude, look at their long-term debt. They have $108 million in debt and $1 million in cash. How are they going to pay off this debt?
They're a utility, though. It's normal for them to have a lot of debt.
That makes me nervous. Can you walk me through that? Like, how does the utility manage so much debt when they have so little cash? They just have the operating cash flow coming in from their subscription payments for the service?
No, so a lot of utilities are basically almost guaranteed by the government to make money. Like, they can, at least in Canada, I believe, they're allowed to charge for their utilities at a rate that gives them a good return on their investment because they're critical to the economy. So they can take on debt with the almost guarantee that they're going to have a good return on that debt. So they just leverage up.
Sounds like a house of cards to me, but like I also get it if it's legally binding. All right, that makes sense. Thanks for explaining that to me, bro.
That was a very bad explanation, but you're welcome.
Well, it doesn't entice me anymore to want to invest in utility companies, so I'm good. I might do some reading on my own time. We got a comment from someone, don't skip SILC, please, from Grape Jelly. Jelly, great seeing you every week.
SILC.
SILC was apparently in there, yeah. And we do see all these stock suggestions. Normally, we are taking live stock suggestions from the chat, so definitely sending our light sorry from Canada that we're not doing too much of that today. Just as a reminder for people joining, we're putting together a watch list using our screener, doing a lot of live stock research with a bunch of stock nerds. So thanks for everyone hanging out.
This stock was 35 cents in 2003. It's $37 today if we want to round up. It's almost that's an 11,000% gain on a $245 million company. Okay.
Sorry, I was messaging people in the chat. You get lost in the chat. It's like really fun talking to you all.
Engages in the provision of networking and data infrastructure solutions. The firm's products include server network interface cards with and without bypass, intelligent and programmable cards, and features such as encryption. So that's enough of those words for me.
Oh, that was a fun graph.
So this is their revenue. I mean, over time, it's actually really grown. Like really grown. It's at an all-time high right now. That's not bad. What's their balance sheet like?
I mean, it looks like their costs are growing with it though. So like the margins seem to be staying the same.
34 million in cash, 36.9 million in debt, and total liabilities. So they actually have a very strong balance sheet too. Like not bad at all.
Maybe we can click TTM or yearly here to. That's I don't know why the graph isn't. Oh, that's a bug.
Oh, that's weird.
I'll try to fix that. Finding software bugs live.
Yeah,
and they probably have a weird reporting structure. Fun stuff for the engineers to not get nervous about.
I'm not in love with the cash flow here.
Yeah, as you take a deeper look, just a little bit of chat love here. AZZA Keen says, "Give me some 100 baggers." Please, we are getting some feedback. Captain Strange, do more of these screening videos. Andy, thank you both for your work. Ellen Vessor, this is awesome. The happiest beggar. It's nice to do this once a month. Wow. Thank you guys for that feedback. Definitely appreciate it. So I'm having fun too, man. This is a really good time.
So this one I'm going to add to the watch list because it has been way more. Well, actually, sorry, it's been about a 100 bagger historically. I mean, it's up 10,400% over the past 20 years. So they're doing something right. And I would look into this one more actually.
I'm kind of feeling neutral on it, but I think I'm down to add it in.
I'm adding it in because the historical performance has been so strong. So I think that's going to give me a reason to look a little bit more.
We have another please don't skip request. And to give Grape Jelly credit, we skipped over this one and then we added it to the watch list. So after this, Ryan Youngetgeik, sorry if I'm butchering your name, please don't skip over KULR. I want to do a text search on that one. Throw us a bone here on that one, Ryan. Where did you see KULR pop up here?
Yeah, I'm not. Is it down here?
I don't know. I'll watch the chat for that one.
Okay.
And yeah, just for everyone requesting, we are sticking to the screener for today, but come to future episodes, we will take your requests.
All right, we're gonna look at a road and rail company.
Oh, let's go.
Wow. That is like the most volatility I have ever seen.
I also think the company has like gotten bought out or something. That is a roller coaster. Could you imagine holding the shares since like that dip in 2011?
Could you imagine? Could you imagine being up like 1,000% on a stock and then watching it fall like 80% almost all the way back down to your cost basis, it going back up 300%, then falling back down to your cost basis? No. I don't want to die young. I don't want a heart attack. I'm good. All right, next.
Yeah, that one's definitely hard.
Yeah, I don't know about that. ADTH. This looks like it was a SPAC. 10% free cash flow yield media company. Looks like there's been some growth. Real-time bidding enabled mobile ad network services. So some sort of ad company.
Well, let's see. So we actually have Nub Fub. Good. I hope you guys follow up on these with stocks with deeper analysis. If you're not in our Discord, you should join there. I think it would be fun to continue the conversation there. I think a fun handoff is we're doing the first part, and then our community will come together and start looking at these stocks, make other watch lists. So the conversation will definitely continue in our Discord. I'll drop a link for that if anyone wants to join. It's totally free, by the way.
Okay, so this is a food products company with a 6.7% dividend yield and a 770% free cash flow yield.
What? Is that right?
I don't know if that's right. This seems a little bit. You know what? Let's take a look. U.S. based company in the food industry. The company is headquartered in Inver Grove, Minnesota. 10,000 full-time employees. Provides agricultural company which provides grain, food, agronomy, and energy resources to business and consumers. So think about this: 10,000 employees apparently, with a $364 million market cap.
Wait, sorry, what's the ticker? That's a lot lower. CHSCP.
Revenue hasn't really been growing. $462 million in cash. $10.3 billion in liabilities. This looks fishy to me.
I'm also like having very weird, like uneasy feelings. Just like that something's not right.
It's done $3.3 billion in operating cash flow in the trailing 12 months.
So what's our latest operating cash flow figure? I'm just cross-referencing something.
It's apparently done $2.8 billion in free cash flow.
This is so interesting. Yeah, I think
I'm going to add it to the watch list, but I'm not optimistic that I'm not optimistic that this is like, I feel like we're missing something. But anyways, that's definitely something to look into. Okay.
Cross-referencing with other sites, which I hate doing because we're right 9 times out of 10. Like other sites are showing the same data for market cap and like cash flow statements. So you want to know what I would do? What I want to do after this stream? This is homework for everyone. Type in that company's name and then investor relations, and just like see what they're sharing with shareholders from their website directly. Like can we actually do that quick here? Would that be cool? I don't know, like how deep is too deep on some of these. Have you moved on?
I'm already on the next one.
I got you. Yeah, let's just go to the next one then. I'll do this on my own laptop.
If you would like to.
No, dude, I think having ADD in this situation is good. Get through a lot of stocks.
I'm looking at a postal realty company right now.
Yeah. All right. I will shut up after this. The last comment I'm going to land is I am sharing the link to the investor relations page for that crazy looking stock that we just looked at together. Just posted in the chat. So for those who are like curious to do a look and might want to like come back and let us know what's up there, that's probably a good place to check out. Anyways, officially putting that one to rest. You said it was in the watch list?
Yeah.
Let's go.
6.4% dividend, smaller cap REIT. Okay, what does this REIT do though? What do they do? Managed real estate company headquartered in New York.
The firm conducts its business through an umbrella partnership REIT. I have never heard of that in my life. Has anyone in the chat heard of an umbrella partnership REIT?
Firm owns and manages 1,700 properties leased in the U.S. Postal Service.
That's so weird.
So it owns Postal Service properties.
I thought that was like completely federally managed. Like this is a for-profit company that you can like get exposure to the United States Postal Service.
Yeah, and its revenue
like rent,
and its revenue has 5x'd over the past 5 years.
I didn't even know that stuff like this existed. I love stock screening.
Look at its cash flow,
dude.
Its cash flow has
what?
Its cash flow has 8x'd since 2020.
This is the PSTL. Wow.
Its dividend has also been growing.
I mean, I hope so. With the cash flow going up like that, it's nuts.
I'm gonna add this one to the list. That is actually quite interesting. What's also interesting is its stock hasn't done anything since 2019, but the revenue and cash flow and everything is up like quite substantially. So
I mean, is there any risk to the U.S. Postal Service? I guess that's something for people to figure out after the fact, because that is a lot of concentration. Where, like, if anything happened to U.S. Postal Service, or if they went more digital, like, that company's effed. Or if they start scaling down the United States Postal Service, they did just raise the price of a stamp, I think, from 63 cents to 66 cents for the Forever stamp. And there's also a big decline, decade over decade, in the volume of mail going through USPS as more and more things go digital. So that would actually be my concern. Are we getting out of the small cap territory? What's going on?
we literally just looked at every single result. So yes, we're going to mid caps now. 500 million to $2 billion. So some more.
So we haven't sorting by general score. What do you think about sorting by market cap?
I'm actually going to remove marine from the filter because I don't like them. And pharmaceuticals.
I concur with your reasoning.
Save those filters. All right, here we go. What is this one? Trading companies and distributors. Got it.
Love it.
18% free cash flow yield. It's up a lot.
Whoa.
It's up 1,400% since COVID.
Dude, we came late to the party on this one. Look at that Insight score. Wow.
Its revenue has actually been declining in recent quarters, though.
Interesting. I hope that this thing pops.
Its revenue hasn't grown since 2015.
What is happening right now? I feel like I'm getting almost too excited the more and more like we do this. Like, I might need to take a little walk outside to calm down.
I'm not loving this one.
Why did the stock move that much?
I don't know why.
That makes no sense.
United States Lime and Minerals construction company. What do you think about construction companies?
I'm blank. I haven't really thought about them too much.
Yeah, let's take a look. Why not?
I mean, people will keep constructing things. It's just so vague, right? Is this company an AI?
This is almost a 100 bagger.
So for people on audio only, this is USLM. Basically, the stock price in the past year has just been a almost vertical line straight up. Yeah. Oh, wow. The returns on this, maybe 1,000 bagger if you bought it a decade or two ago.
That is ridiculous. That is ridiculous.
What right, are they? USLM. We got to dive into this one.
Engages in the manufacture and sale of lime and limestone products. That's what they do. They sell limestone products, and apparently they're in high demand. Okay. Let's take a look at some financials here.
Yeah.
So the revenue has been exploding since 2020.
Cash flow is looking good too. Well, looking all right.
They got to have a clean balance sheet with their stock doing that. $147 million in cash, $50 million in debt. So they have 3 times as much cash as total liabilities. Very strong balance sheet. Like, no risk to that balance sheet, really. Cash flow has also been growing very nicely over the past 2 decades. It was $7 million, $7.5 million in 2003. It's now 10x to 77 million. I wonder if they bought back shares.
Sorry, you said that they had 50 million in debt or liabilities? Because I'm seeing that this company has no debt.
Total liabilities.
Got it. But no literal debt is also very nice.
Yeah, so they consistently buy back stock, and they bought back a lot of stock in 2012. Like, whoa, a lot of stock.
Oh my God, I love stock so much.
Was their stock cheap in 2012? If their stock was cheap in 2012 and the management just bought back a ton of shares, then, like, honestly, good job.
Yeah. I mean, that could have caused the share price to go up.
It could have been what caused that spike right there. This is an interesting company. This is going on the watch list.
Nice.
Do insiders own a lot? Not even. And they've been selling.
They have been selling. Okay.
Honestly, like, with that vertical spike, I would not be surprised if this company was on the more expensive end right now. But, like,
Yeah.
That historical performance is ridiculous.
I feel like we're looking at it too late. I thought the
know.
same thing with like NVIDIA insider selling. I'm like, I totally respect NVIDIA insiders selling. And there's also a difference between like they were selling portions of their shares, which is appropriate. They're going to get more shares as they work for the company, as opposed to just like selling literally everything they have the second they get it. Should be like more of a red flag.
This is Marine Products Corp.
Wait, but you said that you didn't want marine. This is in leisure products. Are we just getting punked?
Well,
like, is this a marine stock?
They probably sell boats like that last one we saw, like Mastercraft.
But you said you didn't want more marine stocks.
I don't want shipping companies.
Okay.
Yeah, they say they sell fiberglass power boats. There you go.
Fiberglass sounds fancy.
11% free cash flow yield. I'm not excited. All right, next one.
Screw fiberglass boats.
Yeah,
we don't need them.
I don't like them anymore.
Never liked them a day in my life.
Oh, I have Perry on my watch list. Cool. Let's take a look at this. Is this on my plane research? It is on my plane research. Okay. Perry, this is a media company. 7% free cash flow yield. Looks like since 2018, this stock is up 1,000% now. Okay. $1.64 billion market cap. Revenue looks like it's growing very well on a yearly basis. What do? Global technology company which engages in the provision of advertising solutions to brands, agencies, and publishers. Okay. Cool. Financials.
Oh, dude, we're up to 9 stocks in this watch list.
Yeah.
Nice.
Yeah, so the revenue is still growing. Cash flow is at an all-time high. Last quarter was not amazing, though. So what's the balance sheet like? A lot of cash, it looks like. $436 million in cash.
Wow.
$234 million in total liabilities, so very strong balance sheet. What do they do with their cash flow is my question. So low CapEx. They don't pay a dividend. They don't buy back stock. That's why their cash has been growing.
I do. Their cash position, I'm doing really rough math right now, is like 30-40% of their entire market cap. Yep. What did you say it was? Like 400 million in cash?
Yeah.
Damn.
That's actually kind of interesting.
Okay, so a little bit less than what I just said before. That's still a lot.
I'm going to put that on the live stream. And yeah.
Put that on the live stream, on the watch list. So we just hit 10. I'm also checking the time. I'm getting kind of hungry, man. We've been here for about an hour. Maybe we want to like find one more. How are you feeling?
I have another one here on my watch list already.
Ooh. It's interesting doing this in person because I'm usually like through the other side of the video. But one thing we were talking about, and let us know if you guys feel it, there's definitely obviously more of a, maybe chemistry is like a weird word to use, but just like being in person, it's a lot easier to see when the other person's talking and just body language as well in terms of like when we're going back and forth from screen to screen. So maybe if it's ROI positive for us to do this in person, it could justify us actually, flying out to get together more. But don't let your dreams be means.
Okay, so this stock is up a lot.
Yeah, IPO'd before we were born.
Yeah, I don't really know what they do though. Revenue's been growing very consistently. They had a massive spike. That might be due to an acquisition.
I was about to say the same thing.
That looks like some sort of acquisitions going on.
Goodwill is rocketing up. I wonder their tangies.
Yeah, I don't actually know what's going on there. Last thing I'll do is just take a quick look at cash flow. Cash flow is at an all-time high. CapEx is low. And they're taking on more debt. I don't know. I mean, I'll put it on the watch list, but I'm not super excited at face value. What are insiders doing? Formula Systems owns 46% of the company. I don't know. I'll put it on the watch list.
Yeah, and for those who are wondering how to find this watch list, we just dropped the link in there. Also, who am I if I don't do a shameless plug for what Stock Unlock is? We've been using Stock Unlock this whole time. We are the two co-founders of this business, and Stock Unlock is the investment platform we use and have built because we felt that the tools didn't exist for us at a good price point and a bunch of other things that I won't spill out to turn this into a business pitch. But if you're not on it yet, definitely check us out. It's free to use. If you have friends who are investors or own stocks, they can analyze their portfolio much better with Stock Unlock, and I'm very happy and proud to say brokerage account linking is coming. It is in testing almost. It is happening. I can guarantee it's coming kind of soon. This was a big pain point for a lot of people. And we are also going to be looking to hire a founding engineer, which is incredibly exciting. We are really underwater with features. We have enough cash flow at this point to start to justify that. And thank you everyone who's already supporting us. I mean, this has been our first in-person stream. I mean, just feels really incredible.
Oh, Brandon Beavis was here. Hey, Brandon. I wonder if he's still here. Thanks for tuning in, man. Was looking at the TSM this morning. Still a crazy insight score. Yeah, I mean, if there was zero Taiwan risk with China, then I think that stock would probably be worth double what it is today, because that company is insane. Like, go look at TSM insight score. It is insane.
I will.
Okay. Yeah, thanks again, Brandon, if you're still here. Thanks for tuning in. Grape Jelly says, all home builders, construction companies look like that. I just find that it's buying near the top of the cycle, in my opinion, even if it's run for another year or two. That's like my thing with oil companies and companies like that, is like when oil prices are high, their price to free cash flows and free cash flow yields tend to go up. But then I'm always like, if oil prices go down and their cash flow goes down, even if the trailing 12 months price to free cash flow is low, am I actually buying it at the top? And like, I never know.
Hi, SM Finance. Good to see you.
Ralph, are you sharing? Yes, we are. Grape says, tell that bird to watch its mouth. Okay. Maybe there was a bird.
That's going over my head. Tell us more, Grape Jelly. What bird are you talking about?
What's up, SM Finance? Thank you for tuning in. Appreciate it. Yes, we are IRL in real life. Jake is staying at my house for the week.
Not AI generated or green screen.
All right. Yeah. I think we're good. You said you're getting hungry. Do you want to wrap it up?
Oh, dude, that was a great pun. Wrap it up. Hungry? There
you go.
Wow.
Incredible.
I never want to wrap it up, but I mean, if we didn't, we would be here forever. So yeah, it seems like a good time. Thank you everyone for joining. This concludes episode 39. If you have not found us yet on Spotify or you're listening there, we would really appreciate a rating and throw us a thumbs up. Let us know you're here. I always say this, let us know what you think. We are driven by your guys' feedback. It is way more fun talking to people than no people at all. But honestly, we would probably do both, just because even when we weren't in these streams, we're literally just talking about stocks all the time. Anyways, so.
Ralph says, time to hit the stampede, boys. I think we're going to be going on Thursday. I think that's the plan. So we're not planning a meetup this time that Jake's here. We kind of figured that if we do a meetup, we should plan it in advance more and like actually spend time, especially Ralph, yourself, if you're going to be driving to Calgary or whatever the situation is, like actually traveling. We just want to make it a good experience for you. So we'll plan it better in the future. But yeah, we're going to be at the Stampede on Thursday. So if anyone's there, let us know.
Okay. Ali, great to see you. I like to say this. Shout out to Ali. The reason why we have a Spotify podcast is because of this amazing human right here. Out of the kindness of their heart, they go out and actually really help us out a lot with that. Dare I say, do almost everything. And did own a free earn a free Stock Unlock sweatshirt from that, which is not really something that we do. So well deserved. Want to give you a public shout out here. Everyone say thank you to Ali. And yeah, probably a good way to end it. We're so bad at this. Taylor makes fun of me because she says you guys start saying bye and then you do it for a few minutes. And it's totally true. And it happens every time.
Yeah, what do you want to talk about next?
How I'm going to hit this end broadcast button.
All right.
Bye, everyone.
Bye, everyone.